Good morning, everyone. Happy Tuesday. It is Julie here with your TipRanks pre-market morning update, where we are covering everything you need to know before the opening bell. I am here Monday through Friday with videos out before market opens, so make sure that you're subscribed to the channel and that you have those notifications turned on so you can stay up to date with all of our latest videos. Also, if you want to stay up to date with all of the latest TipRanks news and articles, don't forget to check out the TipRanks Twitter page. The link will be down below in the description. In today's video, we're covering some exciting stock market news, our day's biggest gainers and losers so far, plus some notable earnings reports. So here we go. Starting off with stock market news. U.S. stock futures are a bit mixed this morning, with Dow futures being down about 0.07%, the S&P 500 futures up 0.04%, and the Nasdaq up 0.4%. Shares of Southwest Airlines jumped nearly 1.8% on Monday after the world's largest low-cost carrier airline announced an operational and financial update on its business. Southwest Airlines passenger demand and operating revenues were in line with the company's expectations for February, thanks to an improvement in leisure passenger bookings. Following this, the company forecasts operating revenues for March to decline 15 to 20% year over year, better than the prior assumption of 20 to 30%. Being cautious in the current uncertain demand environment, the company continues to plan for multiple capacity scenarios. They do come in as a moderate buy, and the average price target does have a downside, but there were a couple buy ratings reiterated in the last couple of weeks with upwards potential over 10%. In dividend news, MGM Growth Properties increased their quarterly cash dividend by 1.5% to 0.495 cents per share. This marks the company's 12th dividend increase since its initial public offering in April of 2016. MGM Growth Properties indicated that the new dividend will be paid on April 15th to shareholders of record as of March 31st. The company's annual dividend of $1.98 per share now reflects a dividend yield of 5.79%, and MGM Growth Properties does come in as a strong buy with an average upside potential of about 9%. Now we have a couple companies who have announced share buyback programs, starting off with Fair Isaac Corporation, who announced a stock repurchase program of up to $500 million. This helped send the shares of the data analytics company up nearly 5%. Fair Isaac's announcement follows the completion of the company's prior stock repurchase program, which was in effect from July 2020 through March 2021. Fair Isaac does come in as a moderate buy with an upwards potential of around 10%. And the second company to announce a share buyback program was Caci International. They announced their accelerated share repurchase plan of $500 million as well, which represents about 2.1 million shares. Per the ASR program, Caci said that it will receive an initial delivery of about 1.7 million shares on March 16th. The company expects the repurchases to close before the fourth quarter of 2021. One analyst said that the ASR reflects management's confidence in free cash flow momentum, contract visibility, and liquidity. The Caci stock comes in as a moderate buy with an average price target of $290 per share for a nearly 17% potential upside. Mr. Cooper Group has inked a deal to sell their title business, which operates under the brand name Title 365, to Blend Labs, a digital lending software provider. The deal is worth $500 million, including $450 million in cash and a retained interest of 9.9%, subject to certain adjustments. The transaction, which awaits regulatory approvals, is anticipated to close in the second quarter of this year. Mr. Cooper Group's stock comes in as a strong buy, with several of those buy ratings reiterated yesterday and today, and an average price target with about a 17% potential upside. And last but certainly not least, we have Nokia, who announced a deal with telecom carrier Orange, under which the Finnish company will expand its self-organizing networks technology across Orange's 5G networks. This partnership covers all of the markets served by Orange. Nokia already offers 2G, 3G, and 4G support to more than 1 million Orange radio cells across Europe, the Middle East, as well as Africa. The Nokia stock does come in as a moderate buy, with analysts split down the middle with 3 buys and 3 holds, and an average price target with an upwards potential of about 17%. Now let's take a look at which stocks this morning are our biggest gainers and losers. Our biggest gainers include Sunlink Health Systems, under the ticker SSY, who are currently up over 70% in the pre-market. Anciano Therapeutics under ANCN, who are up 31% so far. And Cypress Solutions under SYPR, who are currently up 27%. Our biggest losers include Oriental Culture Holdings, under the ticker OCG, who are down just shy of 23% this morning. However, that is following a gain of 120% yesterday. We have CleanSpark under the ticker CLSK, who are down 22% after a decline of nearly 5% yesterday. And Caspian Holdings under KSPN, who are currently down 23% following a loss of 8% yesterday. It is worth noting that both CleanSpark and Caspian Holdings have announced public offerings within this last day. Now looking at some notable earnings reports. Starting off with Resonant, who recently posted a higher than feared fourth quarter loss. Their fourth quarter loss came in at 13 cents per share, compared to consensus estimates of a loss of 10 cents per share. However, it did compare favorably to the prior year's period loss of 24 cents per share due to higher revenues. Their revenues grew 32.2% year over year to $0.6 million and came in line with the street's estimates. The Resonant stock does come in as a strong buy, with recent buy ratings reiterated yesterday and today, and an average price target that gives about a 54% potential upside. We also heard from Westport, who delivered a better than expected fourth quarter performance driven by strength in original equipment manufacturer sales. Westport Fuel's revenue jumped 13% year over year to hit $83.9 million, topping analyst estimates of $69 million. On the back of continued growth in their sales volume and higher light-duty OEM sales, the company saw a 32% jump in its OEM segment revenue. The company posted earnings of 3 cents per share, exceeding analyst expectations of 0 per share. Westport stocks were trading up over 8% in the pre-market so far, and it does come in as a strong buy with 3 buy ratings and $11.50 price target, although we haven't seen any analysts update their price targets since their earnings report came out. Also delivering better than expected results is Catalyst Pharma, whose fourth quarter revenue and earnings outperformed analyst estimates. Catalyst Pharma's revenue, comprised primarily of their FIRDAPSE sales, increased $900,000 year over year to hit $31 million, topping analyst estimates of $30.3 million. The company posted adjusted earnings of 11 cents per share, which was up 57% year over year, with the figure exceeding analyst expectations of just 9 cents per share. Catalyst Pharma just has 2 buy ratings within the last couple of months, but an impressive upwards potential of 84%. And again, they haven't really reiterated those price targets since these earnings results. And finally, we have Accel Entertainment, who had worse than expected fourth quarter results. Their fourth quarter revenues plunged 39% to $74.4 million and missed the street's estimates of $80.8 million. This year-over-year decline, of course, reflects the negative impact from the pandemic. Accel reported an adjusted net loss of $4.1 million, compared with an adjusted net income of $1.3 million posted in the year-ago quarter. And analysts do seem split on the Accel Entertainment stock. We had both a buy rating and a hold rating reiterated today. The average price target of about $14 would be about a 16% potential upside. After the market closes today, we're expecting earnings reports from CrowdStrike, Lennar, and Smartsheet. So that is our Tuesday pre-market morning update, getting you up to speed before the market opens. I am here Monday through Friday with videos out before the opening bell. So again, make sure you're subscribed so you can stay up to date with all of our videos. And again, don't forget to check out our Twitter page for TipRanks to stay up to date with all of the latest news. The link will be down below in the description. Thank you guys so much for watching. I hope you found it helpful. If it was, make sure you hit that thumbs up button, and we will see you back here tomorrow morning.